The much talked about African Securities and Exchanges Association (ASEA) is currently on in Rwanda's capital, Kigali. We shall bring you details of what's happening there within the next 30 minutes on Business Zone. Welcome, I'm Tolulope Ogunjobi. A warm welcome to you again. Now, the 20th African Securities Exchanges Association (ASEA) annual conference is on in Kigali with theme The Road to 2030. Now, over 300 experts and stakeholders from capital market firms, regulators, law firms and issuers, domestic, regional and international investors, ratings agencies, portfolio and investment managers, government representatives and technology providers are currently in the country for the flagship event at the Kigali Serena Hotel. The conference is aimed at making African capital market relevant to the real economy. It will also seek to address the disconnect between African microeconomies and capital markets by exploring possible steps to be taken in order for markets to address the real business needs and fix operational deficits existing among exchanges to be more competitive on the global stage. The conference will also mark the 5th year anniversary of the Rwandan Stock Exchange in operations. TVC News correspondent Effiong Ekop now reports.
About 26 securities exchanges across Africa are meeting here in Kigali, Rwanda. The focus is on the roadmap for speedy development of Africa by 2030. Funding strategies for the real sector of Africa is on agenda. The whole idea is to position African stock markets for direct funding of economic activities. African manufacturing companies, farms, construction firms and infrastructure developers should have more opportunities to fund in stock markets across Africa. African Securities Exchanges Association was formed in 1993 as an umbrella body representing all stock markets across Africa. It aims to develop member exchanges by sharing ideas, development and technology. Countries without functional stock markets have been urged to develop such to key into continental projects. Effiong Ekop, TVC News, Kigali.
Stock market experts meeting in Kigali, Rwanda have cautioned African nations to stop improper transfer of funds to developed economies. Speakers at the event say uncounted funds transfer rob African stock markets of needed investment funds.
Africa alone contributes more than 500 billion annually to other economies. What can we do as experts? I think the task here before us is to think out of the box, outside the box, as they say.
One of the things Africa requires to sustain its growth trajectory is a solid capital market ecosystem that would attract investment and unlock the potential that exists on the continent. We also challenge ourselves to live up to the continent's reputation of leapfrogging traditional stages of growth, and it is my pleasure to report that over the last year, African exchanges have pushed the envelope in product innovation and are continuously embracing advancement in emerging technology.
We know also that more advanced financial structures in which there is a migration from banks, which produce mostly short-term credit, towards non-bank financial intermediaries and on to capital markets, which can provide longer-term finance, are essential for transformation. This does not mean that African countries should rush into establishing stock exchanges. We have about 26 stock exchanges in Africa today. But with few exceptions, we must wonder to what extent they have contributed to structural economic transformation in the absence of pre-qualifying factors.
Well, joining me now live from Kigali to give updates is our correspondent, Effiong Ekop. Hello, Effiong.
Hello, Tulu.
Yeah, now, why do the conference delegates underline 2030, for African development, particularly at this time? We are still at 2016.
Well, this year's event is taking place here in Kigali, Rwanda. And this particular country hosting the association, in a way, seems to be in a haste to develop. Delegates who are meeting here are surprised at the level of economic prosperity of Rwanda. And we learned that it was the Rwandan government and delegates that actually suggested the theme of the conference and chose the year 2030 as the benchmark for African development, which is in tune with the country's vision of developing all key sectors to bring it up to international standard. And so ASEA delegates accepted that suggestion from the Rwandan delegates and our government.
Interesting. Then now I'll follow that up with saying African markets being relevant to the real economy. That seems to be a very, very, very good one, because I also saw in your report that you mentioned that. So how relevant do they want the stock markets to be when it comes to development of the real economy?
Here, delegates are concerned with funding African businesses. Manufacturing companies, insurance companies, and farms are believed to have great problems sourcing out funds for development. And so they have to come to the stock market and be able to source their funds. So the stock market has to help investors in different sectors of African economies, and the markets across Africa must be positioned for such growth. That is the concern of delegates at this conference.
All right, now we're going to go on this break now, and we'll be back with Effiong Ekop there to still give us more insight into the conference ongoing in Kigali, Rwanda. Stay with us on Business Zone. Yes, the ASEA conference ongoing in Kigali, and we have our correspondent who's reporting live from there, Effiong Ekop, giving us insights and into some issues being discussed by regulators and definitely chief executives of stock markets across the African continent. Now, Effiong, we're glad to have you back. Now, many people have lost money in the stock market. You know that owing to the drop in oil price, and also some countries, for example, Nigeria, facing recession. We know what has been happening. Now, are the regulators not worried about this?
Certainly they are worried, but emphasis must be made that when you go into stock market investments, you are doing business. And in any business, you either gain or you stay afloat, at the investment, or you lose. And that is emphasized. One of the things that people always fail to do is they fail to engage the services of professional stockbrokers or analysts who will read stock movements and company profiles and then recommend that you should buy into certain securities. So that's the much reason why so many people often, lose money in the stock market. Having said that, generally the decline in the global economy actually brings down enormous gains from the market. The regulators or delegates meeting here are concerned about that, and they can only recommend market education, that is financial literacy across the continent. And that much ASEA has been doing country to country and is positioned to take forward. There is sympathy for investors, and we believe that if they take to advise engaging experts and analysts before entering the market, they will minimize their level of losses.
Interesting. Then let's look at deepening the African market in general. What are the key? What are the delegates saying about this? Because we know we really have to deepen. I know you've talked about funding. You've talked about some other issues. How do we deepen this market?
Developing financial products for African markets is key, and really it tops one of the agendas here. Other market products like exchange-traded funds, derivatives, they are lacking in many of the African market except, say, South Africa. Nigeria has, managed to move up, on the average. I think ETF is doing very well. We have about 8 of them now on the Nigerian stock exchange. So some other markets, they will deal basically with the company equities and government bonds. And so the idea of product variation is key, and product developers are really thinking along that line. One of the suggestions here is a possibility of getting consultants across markets to develop various financial products for investors who want to stay longer days in the stock markets.
Interestingly, good financial products, that would really be very important. Now, in your report, you talked about a brief history of the African Stock Exchanges Association. Can you give us more insight into this? Because I know our own Oscar Onyema seems to be the chairman or the president of the association. Tell us a little bit more about this association.
Yes, the African Stock Exchanges Association was formed in 1993. And this comes as an umbrella body for continental market. Indeed, Nigeria, or I could say West Africa, has made great contribution to the growth of Asia. If you must remember, the former Director General of the Nigerian Stock Exchange, Ndi Okereke Onyike, stayed here in this association for many years, and she had contributed so much to the developments of this organization. And I do not know whether by default or any means that we also have another chief executive of the Nigerian market heading this association at the moment. But having said that, in the history of Asia, markets have come up. I remember the contribution of this association to the developments of the stock market in Ghana. And now the stock market in Rwanda, which is just 5 years old, has taken a lot of benefits from Asia. And Asia is also midwifing other smaller exchanges across Africa to come on board. So you would say that this continental body has been able to lift up economic activities across the continent and is prepared to do more. We can only hope that governments across Africa will partner with Asia and lift up continental activities. Tolu?
Indeed. The government needs to partner with this very, very important association. Effiong Ekop from Rwanda, Kigali, I must thank you very much for your time spent with us on TVC News, talking about Business Zone and giving insights into these issues, African Securities Exchange Association Conference. Thank you again.
Tolu, it is my pleasure. It is my pleasure joining you from
And
Kigali.
we'll still get back to you later in the day in other subsequent bulletins and also programs to get updates as they unfold in the conference.
I'm all yours from here.
All right then. Effiong Ekop there giving perspective to the meeting, ongoing meeting, to the conference. I think the very important thing is how we can make the markets very relevant to be able to contribute to the growth of the countries, because just like, Nigeria, South Africa, and other African countries, the contribution of the stock market should stand as the barometer that actually checks the ups and downs of the economy. So much is expected from this conference, and we pray that most of the recommendations should be implemented to the latter. Now to other stories now. International rating agencies Moody's has maintained South Africa's sovereign rating at BA2. Levels that's above sub-investment grade with a negative outlook. The negative outlook on the government bonds rating, Moody's said in a statement, reflects risk related to the implementation of structural reforms aimed at restoring confidence and encouraging investments. The agency further noted that the negative outlook recognizes the downside risk associated with political uncertainty and low business confidence and a challenging external environment characterized by low growth, investment and trade. South Africa expected to see economic growth of around 0.5% this year and has been trying to avert a sovereign rating downgrade to junk status, which would raise borrowing costs and deter investments. The Reserve Bank of Zimbabwe is expected to introduce bond notes onto the market today. A majority of the Zimbabweans have expressed optimism that the new measure will be a panacea to cash shortages afflicting the economy. Authorities view the bond note as a way of putting an end to cash hoarding and externalization of foreign currency, mainly the US dollar. The RBZ will release bond notes worth $10 million onto the market with a withdrawal limit set at $50 per day and $150 weekly. The notes are in $2 and $5 denomination and will be pegged at 1 against the US dollar. Tunisia now will this week host an investment conference with the hopes of making it back onto the investors-friendly map after the 2011 revolution. The Tunisian 2020 Investment Conference aims to build support for the country's economic, social and sustainable development. 6 years after the revolution, the country is still caught up in an economic gloom with sluggish growth and massive unemployment. The country's Minister for Investment and International Cooperation, Fidel Abdulkafi, says the transition is over and all the focus is on investments and growth. The government intends to mobilize about $60 billion in investments over the next 5 years and create 400,000 jobs and restore confidence in the country. Well, finally on the show, crude oil prices are down at the international market on Monday after Saudi Arabia said it would not meet with Russia ahead of the OPEC summit in Vienna, Austria. At the London Mercantile, the Brent trades at $47 per barrel. For the OPEC basket, price steadies at $45 per barrel. Well, that's our package for you today on Business Zone. Join us another time for more comprehensive analysis and incisive stories. I am Tolu Lokpe Ogunjobi. I'll leave you with the figures of the exchange rate as they stand today. On behalf of the entire crew, I'm Tolu Lokpe Ogunjobi. Thank you for watching.